happened so far today, as we have a market that is pretty much unchanged right now. But let's go to VIX Central really quick, and then I want to talk to you about a change I have made to my position. Let me get out of the way. I'm in kind of like translucent mode here. And we can see here, all right, Contango up to 7%. So once again, we've gone up by another percent on the day. Now, some people have asked me, well, what does that really mean? Why are you putting these updates about Contango going up? And what it means is that the composition of VXX and UVXY is changing every day. And if you see the first two futures on the screen here, we've got one that's 30.23, we've got the other that's 32.42. Okay, if we have 30 days in a month, then each day 1/30th of whatever the value of this fund is being the futures. 1/30th of the futures are being shifted from these October futures to November futures. So if you had a $30 million fund, $1 million worth of futures are being sold. October futures are being sold, and they're taking whatever money they got from those, and they're taking that $1 million and buying November futures with it. Now, that you can think of it that way, because that's kind of what's happening. Now, the specifics of actually what's happening is that these products are being based around an index that constantly takes into account 30 days out volatility. So it's constantly making a blend of these two futures, and they're making markets around an index to keep these funds, so that the companies can keep the value of these funds and not lose money on them. Sometimes they will trade futures. Sometimes they'll trade swaps. People will come up and point out to me, well, Dave, that's not really the way it happens. You're making markets around an index. However, for the math of it and the way these funds react, you can think of it as OCC futures. 1/30th of a month's OCC futures are being sold, and that money is being used to buy no futures. And so in essence, if you were short VXX and the month was just, and the chart stayed exactly the way it is for this whole month, you'd start the month with VXX being representing a future of 30, and you'd end the month with VXX representing a future of 32. And so what are the implications of that? Well, if you're short, it means that actually you're short from a higher area than you actually thought you were. If you're long, it means actually you're buying a higher level of futures to be long. So the Contango doesn't actually really make you or lose you money in itself. The only way you can make or lose money is for the futures to move. However, you are putting yourself, if you're trading from the short side, you're putting yourself in a better potential situation as Contango rolls along, because your average price that you're getting short at is moving up on the chart. So, and I like to make this point over and over again because it's confusing to people. The only way for you to make money on UVXY or VXX is for the futures to move. And we always have a mixture of futures. We're about halfway through the cycle now, so it's pretty much an equal mixture of futures. However, the only way to make money is for those futures to move one direction or another. But as the month goes by and we're in Contango, you're basically, your cost basis, if you're short VXX or UVXY, is moving up and up and up. And that hasn't turned into profits over the last month because the VIX futures have been moving slowly up over time. But we know in the long term that this stuff reverts to the mean being a little bit lower than here, and thus you're just putting yourself slowly in a better and better situation over time with Contango. And that's why I keep harping on it online, because I have a long-term short, and thus I know that giving myself 6 months or even longer, I've been rolling some of my position out to September of next year. I know that it is very likely to come back towards the mean at some point during that time, and I'm giving myself more and more potential to make money on the short side as Contango continues. It's not only having a large number of Contango, it's having that large number over time. So this stuff slowly rebalances over time, and it shifts stuff up. So just to make like an extreme example, if we were in Contango for a period of months, I might have shorted VXX, and that short might have represented a 20 level in the futures, but because of months of being in Contango, all of a sudden I'm no longer short from 20, I'm short from like 30 or 32, which when the mean is 20, being short at 32 is much better than being short at 20. However, you still can't make money unless this stuff goes down. If it just keeps going up forever, then yes, you're building edge into your position. You're putting yourself, you're losing less, quote unquote. You're putting yourself in a better position, but you're still not making money unless stuff goes down. Now, we saw, if you guys checked out that interview that I did this weekend, you're gonna see a guy that has some pretty specific views about the future, what is likely to happen in the future. Now, I don't necessarily agree with those views. I always like to point out that that's not me, that's another person. But I found it very interesting what that guy had to say. And one of the most interesting parts I thought was when he was talking about, well, yeah, there's been periods in history where we stayed at a VIX well above 20 for long periods of time. So we certainly could stay at a 30 VIX even after the election for a while. However, as long as we stay in a heavy contango, this stuff is going to come in because, the futures get to a point where for example, all last month we were rolling into AUK futures, right? We were selling September futures and buying AUK, and we see that AUK future right to my left now curling down. It's 30, and the more that curls down, we actually are making money because that future is moving lower just in absolute terms. Although the no future is staying higher, the AUK is moving lower, and so we are making money on that. So there's a scenario, a very viable scenario where volatility stays high, but these products continue to decay due to contango. So in a sense, I'm not concerned with what happens day to day, if we get a little pop here or if it moves a little lower here. As long as we stay in contango, that decay is going to translate into dollars over time. Now, even though contango has been building, which is nice, and which I was sort of predicting when some other people weren't, there is decay associated with my position. There's several types of short positions you can have. One of them is just to be straight up short the underlying VXX and UVXY. And the negative of being short the underlying is that you have unlimited risk in a spike. The good thing about just being straight up short the underlying is you don't have that much decay. It doesn't cost you that much to carry the position because, unlike owning options, the underlying never expires, or VXX expires in 20 years or something, but there's not decay really associated with it. If you are shorting VXX and it's a hard to borrow, then there might be some negligible fees associated with shorting it. So, for example, if you have a hard to borrow issue, there may be a fee to short it, and that is something different. But it's much smaller than, let's say, being long puts. So the advantage of being short straight up the underlying is you're not really paying carry fees. The disadvantage, of course, is that you could get a spike like we had in TVIX, where TVIX went from 38 to 1,000, and you might be in a situation where you actually owe you're clearing firm money because there's not enough money in your account to cover the up move. In my case, I've chosen at this particular moment to have a position where I'm long just straight up puts. The other option, of course, is to have be long put spreads or short call spreads. But with my position, I've chosen to be long straight up puts, and they have a decay factor every day. Now, if we look at the position here, we'll pull it up really quickly. It's not that much, it's $30 a day in decay. And that doesn't sound like that much, but over time, 10 days, that's $300. It starts to add up. And so what I'm going to do here is I'm going to pull up under the Analyze tab on Thinkorswim the position I have now, and I'm going to explain what I did to kind of try to sidestep some of that decay. Okay, so here's the position. And so you can see here, if you look down, what I ended up doing, I was long these March puts, and let me cancel out what I did here for a second. I was long these March puts, and when you look at the decay here, theta here's decay, $27 a day it's costing me. I'm short 561 deltas, it's costing me $27.28 a day, so $30. So this position is the March 21 puts. I did buy one June 21 put, 19 put, but mostly it's March 21 puts. So what I decided to do is sell some closer out puts against this position to try to offset some of that $30. That way, I'm not kind of bleeding here all the time. So I did sell some of these 30 October 21 puts. So the same strike expires in October. Right now, we're around $25 VXX. October 30th is 31 days away. So my bet is we will go lower, but we won't go through 21. Either we won't go through the 21 strike within 30 days, or we will have some sort of upward move in this where I can cover my short puts before 31 days out. And what that does is, as I re-click this and add it back into my position, it makes it so instead of paying $30 a day for my position, I'm still short. I'm short about half as much. So I'll make about half as much if we have a big move down. However, instead of paying $30 a day, I'm collecting a couple bucks, right? Now you can see if we did move really quickly down, all of a sudden I would go from short to flat here, deltas, if we moved down far enough, and I would be collecting more a day. So the move here is that we moved back down off of like a mini spike, and I want to try to preserve my capital kind of until after the election a little bit here. And so what I did was I hedged part of my short position here in VXX. So that's kind of the move that I've made here. Now we could get a pop if volatility popped up, then I might choose at that point to buy back the puts I sold at a lower price, and thus kind of trading around the position, you might call it. If we do look at, if we go and actually look at what the markets are in those options today, we can see, all right, so I sold these puts at 32 or 33 cents. Right now, it's kind of in the same area, even though we've moved down 40 cents today. Puts are pretty much in the same area, and it gives me kind of an easier feeling that I'm not the clock is not ticking as heavily in the background for me if I hedge some of that decay. And these kind of trades, we could always go in and take this trade off if we want to, but I've decided to hedge a little bit here the position. So that's kind of where we are with that. So let's see. Hey, what's up, Dazboff? What's up, Warren the Idiot Masses? SVXY, fingers crossed. So SVXY is an inverse volatility product. So as Contango increases, this is going to move higher in general. And we do see that moving up today as everything else moves down. Now, earlier in the year, my buddy Tim Emerson in our options group gave me an idea with buying some butterflies in SVXY, and I didn't end up keeping them on. But when you buy butterflies that are way out of the money, basically you're betting a very small. What's up, man? Cows? What's going on, buddy? When you're buying butterflies that are away from the strike, you are betting a very small amount of money that can come in very big if you get the desired result. And this desired result was that we would go up through, I think it was either 40 or 50 strike by this January, and we're kind of on the way there. When we put the position on before, and I didn't keep this position on, but when we put the position on before, SVXY was around 28, and we've rallied from up to around 35. So we're well on the way to that position being profitable. But for me with the SVXY, we were dealing with these Jan options, and really, if you look on the screen at these Jan options, the prices can be like no bid at $2. And what was happening was the markets were so wide that I was getting these weird marks where my profit and loss for my account was swinging by like $30,000 a day. What is my latest thesis, you ask? My latest thesis is just that we continue to stay in an elevated vol situation. However, the chart might stay in a healthy contango for a while. Obviously, there's questions about the election. You're selling something that already failed. Obviously, there's questions about the election and when stuff is going to be resolved. Volatility is could stay up high where it is for a while. And, the real question is, I think, do we get a crush in volatility after the election or not? But for me, the position I have on will work out as long as we stay in a contango that's above like 5%. So everything's kind of working just fine for me right now as we stay up at an elevated vol here. As long as we stay in contango, my position's working okay. So what do I need to be entirely successful with a position here? I need VXX to continue to move lower, right? So I'm long the 21 puts, so I need VXX by March to break 20 and to start moving down towards 15. Now we know the all-time low in VXX is 13 and change, right? So it would be beautiful if we could break lower down towards and take out that low, and ultimately before March would be completely successful for the position. So if we look here, we've been slowly moving lower. We had that pop a couple weeks ago. This pop a couple weeks ago is kind of where I put the position on. And if we go back in time, you can see right here, we got down to 13 was the low. As long as we stay in contango, we will continue to move lower. So everything's kind of working according to plan for my position right now. One of the reasons I brought that guy on was just to tell everybody there's a good chance that the market just stays in this middle range and we don't take out the highs and we don't have a real dramatic down move for a while. And so, what are potential strategies, beyond like shorting volatility or something? What are potential strategies when you've got a market that is kind of in a mid-range? And one of them is to sell kind of far out of the money options that are farther up or down. So, you look at any of these stocks, you look at a Lululemon, you look at an Apple, and you get a down day in Apple, right? You get a down move in Apple, maybe it breaks 100 one day. Well, it might be a good time to sell, puts down below. You get a big up move in Apple, maybe it's time to sell some of these like 140 calls. So as we're kind of in a mid-range, not at the highs or at the lows, it's a good time to sell far out premium one way or the other, because it seems like we're kind of staying in a middle range right now for a bit. There's a lot of uncertainty. Now, when is that uncertainty going to be cleared up? Well, it seems fairly like it's a done deal that we will get a new Supreme Court justice before the election. It's not an entirely popular thing with the public, but that doesn't matter because Republicans are in control of the Senate and they have the mechanism in place to get that Supreme Court justice through and approved. As far as the election goes, well, we know it's pretty clear that, well, I mean, it's obvious that we won't have an election result until November. A lot of people don't want to make any huge moves with their portfolio ahead of the election until they find out what happens. Another point that Stephen Aniston made in that video, the interview that I did, was if it becomes it's becoming clearer and clearer that the Democrats have a good chance of winning this election and also taking over the Senate. That's the odds-on vote. Now, we can agree to differ politically about rhetoric one way or the other, but the odds at this moment are that the Democrats will win. And thus, Stephen Aniston made an excellent point, which is that a lot of these billionaires that have shares of their companies, they own a lot of shares. Take your Elon Musk. It probably behooves them to sell some of those shares now before the tax rates increase, potentially under the Democrats. So we could see some sell pressure from these billionaires ahead of the election, and also in this tax year this year, because even if Biden wins the election, comes in, changes a bunch of the tax code, it's not going to go into effect until the end of this calendar year, right? So, but the question is, does that pressure from a few billionaires selling their shares, is that enough down selling pressure to actually like tank the market? That's really up in the air, and I don't think there's a clear answer to that. It's going to become a market of stocks as opposed to a stock market. That meaning that it's becoming more important that you actually dig down and analyze individual issues at the moment, than just broadly trading the market. Remember, when we've got these big moves like we had off of the lows from COVID, you pretty much could buy any stock and you're gonna have a winner because everything kind of trades together. Like 99% of the stocks are up one day or 99% down. Now that we're kind of off the highs and the market's kind of in a mid-range, it becomes more important to actually pick specific issues because they're going to, some are going to be up, some are going to be down, and which particular stock you pick is going to be crucial to your success or failure. It's kind of like right after everything went down for COVID, all of these stocks were way, way, way down. And so it seemed like obvious that you could pick almost anything and they would come back eventually. Conversely, when we had everything ripping to the upside and everything's at all-time highs, it seemed like an obvious play that, well, you can short stuff and it's going to eventually, this market's going to crack and everything's going to come down. All of a sudden, we find ourselves in a situation that's not so obvious. For a while, I talked to a lot of people and everybody's like, yeah, just buy Apple and Tesla. You heard of these guys buying like 20 Tesla calls for $600,000 and riding them for $100 or $500. Those sort of like momentum obvious plays are out of the market now. So it's a little bit harder and it's a little bit more strategic what you're going to do. And I believe there's some people that just haven't experienced this sort of market before. So it's going to be a little bit more of a learning process for people moving forward. Slack and Zoom. Trump 2020. It's not a given it's not. Okay, so Manacount says it's not a given the Democrats to take the Senate. Yes. it's not. There's no gimmick. I mean, I'm sorry. There's no givens here. We don't know what's going to happen, and I'm not. I have no interest here to be partisan or to like push forward one side or the other. We're not here to do that. We're here to try to figure out how to make money in this environment, regardless if we're Democrat or Republican. We don't want to vote with our stock trades. We don't want to say, well, I'm Republican, so I'm going to bet on the market this way or that. I saw somebody come on, I'm a moderator for on Facebook for these groups, and I saw someone come on and say, well, if Biden wins, the market's going to go down 10,000 points the next day. Now, I would be very careful to be trading based on that sort of thing because the market's more complex than that. First of all, there's even the most Republican Sean Hannity person would say that the president has a chance of losing this election, right? It's not a given that the Senate is going to go one way or the other. What is a given is, as far as I'm concerned, is if we have a president that is one party and a Senate another party, there is going to be a typical gridlock in Washington, and the market doesn't like gridlock. Not a lot is going to get done. Also, there are huge implications for the Supreme Court, which I'm sure you already know and you've been told by so many people. It wants me to block this Lamont Blanc statement about the Democrats, but I'm not going to block people unless they're attacking each other. Anyway, so a lot of this is up in the air, but I think a Supreme Court, it's very likely that the Supreme Court thing does go through, and that means I was thinking a lot about this interview with Stephen Aniston, where if the Supreme Court, it's pretty much a lock that there's going to be another Supreme Court justice, and that means that the likelihood of Obamacare being struck down goes up higher. So think about the implications of that. I believe right now the odds are that the Democrats will win the Senate, but it's certainly not a lock. And remember, it's not a lock who wins the presidency, regardless of what my guest said last time. He's a Republican who's kind of fallen off of Trump, but he's very convinced that Trump will win. But it's not a lock by any means. And us as traders, we need to have kind of plans in place for any sort of eventuality. So I would think of things in different ways. Even if we knew what was going to happen in the election right now, that doesn't give us the knowledge of which way the market's going to break, or if it's going to break after the election. It's a complicated situation, and I would caution anybody about trading based on their political views or thinking that, well, if X wins, the market's going to do Y, because it's, in my point, not knowable. The Democrats will lose the House, the White House, and the Senate. I think the odds of the Democrats losing the House are very low, just because there's a limited amount of resources, and Republicans have to spend resources fighting trying to defend the Senate and the presidency, and I don't think they're going to put a lot of resources in the House. It was interesting to watch on the news, however, that if the election comes down to the House, even though the Democrats have the majority in the House right now, the way the system is set up, the Republicans would have the edge if the election came down to the House, which is interesting. So anyways, I appreciate Lamont Blanc coming in here and pushing forward Republican talking points, because, that is a view of a lot of people. However, I tend to I tend to trust the polls. I don't think that everything is rigged. I think we have to trust some of the data out there if we're to make informed decisions. And I understand you want Trump to win, which is fine. Anyways, so I am going to let it stand there for now. It looks like the market's breaking down a little bit, but everything's going according to plan as far as my position currently, which is great, and I hope you guys are doing well. I will be back on the day after tomorrow, and I look forward to talking to you again then. Thanks for watching, and we'll see you soon.